All right, good morning, everyone. Let's kick it off. Like if we get up to 50, will you show me 5? Thanks, John. All right. Last night finally broke out of our ridiculously narrow trend in on U.S. markets. I think I read something last night that said the S&P 500 had 4 sessions in a row where we had less than a 0.1% move, which was the the 4 days of the least volatility in a row in terms of the closes ever. So that just kind of says something about how we just went back into no volatility out of nowhere. Last night we did kind of sell off at the very end of the session, but other than that, obviously new records, S&P, Dow getting very close on the Nasdaq, and yeah. All windows. Right now we had some German data out yesterday that really got things going in Europe, and I think that's kind of why we saw the continuation of that in the States. Obviously the market's been very worried about Europe and probably Germany in particular, but the numbers that came out there, investor confidence report and everything, was very solid. So markets really took off from there. Other than that, not a whole hell of a lot going on in the States during the day. In Asia, we actually saw markets sell off quite a bit. The Nikkei actually, as we speak, down closer to 1/3%. The only thing that really escaped it was China. There's a couple things that happened here. I think the biggest thing that maybe happened overnight, like we've talked about with this Chinese data, it just continues to come out, continues to be disappointing, and that's just starting to really spill over to some of the miners. We're seeing Fortescue that they got hit about 7% in Australia. Obviously, these iron ore specific stocks are really starting to look ugly. I'll show some of the charts here locally again on those in just a little bit, but iron ore down 3%, and I think it took a lot of those stocks down with it. I'm actually surprised the Nikkei managed to come down today with the yen breaking that 117 barrier against the dollar, but we've just kind of managed to not be able to rally at all in Asia as of the last few sessions. So I think it's a bit negative. I think we come into our session this morning with a little bit of a negative undertone, even though the States had a really good night. All right, charts of interest here. We got the U.S. versus the European corporate earnings here, and you can see the divergence here. It just says everything and says why everybody just wants to pile into U.S. equities and nothing into European equities. And you can see, the earnings curve has literally been flat at best for the last maybe year, and looking like it's starting going to maybe tip back down to the downside here if we pop back into another recession. So that's obviously the reason for the total avoidance right now of European equities that we've seen in the past couple quarters. Right, this morning we had Tiger Brands, which is out with headline earnings per share, pretty much in line with guidance. Revenue actually looks a little bit better, and divvy per share looks a little bit better. There were some comments, some bearish comments, I think, out of maybe the CEO and tough conditions and yada yada, but overall numbers look okay. We've got Target out today as well before the bell in the States. All right, we've got the Japanese Oil Industry Activity Index, which is out this morning, came in line. We've got local CPI at 10. 11:30, we've got the Bank of England minutes. Then a slew of data out in the States. We've got mortgage apps, we've got housing starts, we've got building permits, and then we've got the minutes from the Fed meeting. Right, let's get into some maps here. First thing I want to have a look at is the Aussie future, and there's a big level here you can see here on the daily that's kind of right in around 45,000. It's obviously it's a big round number, but you can see there we topped out there several sessions in a row before we finally broke up and got through it, and we really consolidated above. That the one look that we had at the 30-minute the last couple sessions, that really tight range we've kind of we've popped out of, and so I think that there was never going to be a real big target out of that, but we're out of that consolidation range. I think if we drop 45,000 today, then we could see maybe some significant downside. There's a couple of things that could be putting pressure on our market. We've got Tencent that's down 1.75% right now in Hong Kong. We've got iron ore that's under pressure, so you got to think that our mining stocks outside of the golds will probably be under pressure. So keep an eye on there for those today. I think wouldn't be surprised to see us start to push it a little bit lower and the Aussie and get below that level. Right. Next one we'll look at is FirstRand. FirstRand kind of popping back up toward this 49 level. If we get through 49 here today, we're probably going to see a quick 70-cent move, which should take us up to about 49.70. So just watch that for the intraday guys. The same stocks continue to just win on a daily basis. We've got Barclays Group, ABSA, that has popped out of the top of a little bit of a descending triangle, flag, or whatever you want to call that, on the 30-minute. And if you look at it on a daily, you can see as well, we've made a new, we haven't actually broken out from the top of this pattern, but we did make a new closing high. So, I mean, we're right there. I think, a push above 78 is a full-on breakout of this little cup and handle, and probably significant upside from there in BGA if we get above 178. All right, MTN. MTN has just been the absolute dog of late. It's just every time it manages to drift up early in the session, you can pretty much hit it. We've really dropped below this, call it I drew that a little bit high. It's about 226, I believe, was the previous close, or 226 and a half. And we got below that in yesterday's session. You can see there we closed below it down at 225, right on the 200-day. This is a big level, but I mean this pattern's doesn't look good. It looks like a little continuation to take us lower here, and consolidation maybe after we dropped support at around 233. So right now it's definitely not looking great here for MTN. So watch this one closely. I wouldn't be surprised to see this thing come back further into that full target of 220, which I think is really where the big target has got to be of major support in MTN is right there. You can see that lines up beautifully. That's where we broke out from. We head faked it down the one day before the set of numbers, and it's ripped higher up to 260. So this would be a nice correction into that 220 level. It might be a place where we can actually start to put on some risk in MTN. All right, next one I'm going to look at is ShopRite. I'm going to look at this on a weekly chart, and if you look at here on the weekly, we've actually broken out beautifully of a bull flag pattern. So this would give us a significant upside here from this breakout if you like the weekly. Like I said, this is very significant. This is a pattern that's been forming over a long period of time. So I think very bullish for ShopRite, and maybe can play catch up to some of the other retail stocks that's been lagging so horribly. Right. Next one we'll look at to finish up here. We'll look at a couple of the iron ore stocks. Kumba yesterday, 2 days ago, had a really good day, just kind of out of the blue. Got above the crucial 260 level, and then yesterday we just give it right back up. I think that's important that it did get right back below 260 and close at 259 yesterday. I think we could complete this pattern and take us down to about 210 quite quickly. There's a couple others. I mean, Essar, if you look at what Essor's done, Essar has dropped that same sort of pattern and dropped it badly. I think there's still meat left on this bone. Probably lower levels to come. This one's quite thin though. And then ARI continues to manage to just somehow hang on to 135. It's like it gets below it and then it holds on to it on a closing basis. You can call this level maybe 135, 135.50. Either way, you can see we haven't quite dropped it yet, and I think that we're going to need to see that level drop for us to see the breakdown here. I'd say, with a breakdown of that level, we probably got a quick 12 rand. Today would be a day that I wouldn't be surprised to see it happen, simply because we've got iron ore prices down another 3%. I mean, the forwards are showing us all the way down around $67. On iron ore, which is which is ugly. I think that Kumba's break-evens around here somewhere, maybe around 65. I think ARI's break-evens even higher, maybe around 72. So at some point, these things are going to have to give it up, yeah, it could get a lot uglier before it gets better for the iron ore stocks. And just keep that in mind, guys. That's it for today, guys. Thanks a lot.